Hello and welcome to Blythe Business News, where today I'm joined by David Hobbs, who is Executive Chairman of Pantheon Resources, and his colleague Jay Cheatham, who is Chief Executive of Pantheon Resources. Pantheon, listed in London on the AIM market with a ticker of PANR and a market capitalisation of around £245 million. David's here in the studio with me. Jay is joining us by video link from North America. Jay, you've recently announced your full year results. It's been a busy year for Pantheon. Please give us a quick overview of some of the highlights of the year as you see them.
Okay. Yes, thank you, Tim. Well, first, the biggest is we got an independent expert report from NSAI, Netherlands Sewell and Associates, on our Kodiak field. And that was just under 1 billion barrels of marketable liquids of contingent resource. In addition, SLB, formerly Schlumberger, has developed reservoir models for both our Kodiak and Ahpun fields. And both of these organizations are continuing to refine and update these studies and these models. We strengthened our team. We have added 2 excellent new independent board members, and we've added Tony Beilman as Senior VP of Engineering to beef up our drilling and completions. And finally, we revised our corporate strategy, which was very, very significant, Tim.
Well, I want to come to David on that now. David, welcome. First time on the program, I think, in person.
Well, good afternoon. Yeah.
But as Jay mentioned, you've revised the corporate strategy. What does that now entail for the company?
Well, I think in simple terms, much greater focus. The target we've set ourselves by 2028, so 5 years down the road, is to achieve some kind of market sustainable recognition of about $5 to $10 per barrel for the resources that we'll be bringing onto production. And that's underpinned by moving forward to final investment decision on Ahpun, the smaller of our 2 giant fields, and then Kodiak, Ahpun in late 2025, Kodiak in 2028. And the focus is to simplify. What actions move us closer to that target, whether it's quicker, cheaper or better? And if an action doesn't move us in that direction, then we can afford not to do it. And if it does move us in that direction, we should prosecute it with absolute clarity and urgency.
Okay, so thank you, David. That's clearly a refocused strategy. Jay, may I now come back to you? You've recently announced that Pantheon has been the successful bidder for around 66,000 acres in the Alaska North Slope lease sale. Look, tell us a bit more about the acquisition and what that will mean for Pantheon.
Yes, Tim, thank you. Well, we acquired about 43,200 acres west and north and northwest in the Kodiak field. And that's very important because substantially all of that acreage that we acquired is conventional, all the mapped conventional reservoir potential in the Kodiak field. It's shallower, which means that it's had a lower depth of burial. That equates to better reservoir parameters in this update location. Also, because it's shallower, it's less expensive to drill and complete with conventional technology. We acquired slightly over 23,000 acres on the east side of Ahpun. And once again, it's considerably shallower. And this acreage is important because it comes on the heels of the successful re-entry and test of the shelf margin reservoir at the Alkaid-2 location. And it just reinforces our development case and enhances the perceived value of this acreage. Also, this acreage, these reservoirs that we acquired on the east side are reachable from the west side of the Sag River and near the Dalton Highway, and with conventional drilling and completion. So very important to us, this addition of a little over 66,000 acres.
Sounds to me like strategically, operationally, Pantheon's made significant steps forward in the last 12 months. David, I just want to come to you for the final question. If that's been looking back at where we've come from over the last 12 months, looking ahead, what objectives are you hoping to achieve in 2024?
Well, of course, the most important thing is access to finance. And the commitment we've made to our investors is to seek to raise the money we need to bring ourselves to first production with as little dilution to the existing value of the shareholders as possible. The development is completely different than many of the other North Slope developments. It's really very cold West Texas. It's one well at a time, close to infrastructure, and so the cost of getting to first production we estimate conservatively at $120 million. Compare that to $1.5 to $2 billion for Pikka Horseshoe, $6 to $8 billion for Willow further to the west. You can see it's a completely different order of magnitude. And so we think there's a very realistic opportunity to raise a good deal of the funding without having to issue equity. And that is our number one strategic focus. And so all the actions that we're taking in the first part of the coming year are going to be around arranging the relationships with vendors, with potential off-takers, to maximize the funding we can develop from those sources, so that then the residual equity requirement is as small as possible, even in a perfect world zero.
Well, David, Jay, thanks for joining me today. That was David Hobbs and Jay Cheatham from Pantheon Resources, looking back on the steps taken during the course of this year, and David there is looking ahead to some of the most significant steps they'll be taking in 2024. That's it for this edition of Blythe Business News. Thanks for watching.